Welcome to the last section of the Essential Traders University official day trading course. You guys have already made it this far, so I would really recommend you guys pat yourself on the back and definitely continue staying motivated through this whole process. So, this final section, I'll be talking about how you can create a profitable trading system and managing your trades. So, the first section is very short, but I want to talk about the importance of win rate and risk reward ratio when it comes to creating a profitable trading system. Now, this is typically data you will only get once you have completed a bundle of trades. For example, a few hundred or thousand of trades. I would not base this off of 15, 20, 50 trades. I would definitely take at least 100 trades to actually see the true results of your win rate and risk reward trading ratio of a trading system, because market conditions change. Okay, the market has different phases, and there are some days where you will have great setups, and some days you won't. And some days that you won't, you might be forcing setups, and that's still something you should take into consideration in your trading statistics. So again, I would recommend probably a minimum of at least 100 trades before you can truly test and prove that a trading system has a positive profit factor and good win rate and risk reward ratio. But this chart here, nonetheless, shows the risk reward ratio and the win rate correlation. What win rate you need and what risk reward ratio combination you need to become profitable. Look at this chart here. As you guys can see, with a 1-to-1 risk reward, you need at least a 50% win rate to break even. I would say even higher than 50% to break even. The reason is, first of all, commission fees and fills and spread. So I would say even higher than a 50% win rate to break even if you're trading your risk reward 1-to-1. Now, usually, most cases, 1-to-1 risk rewards will deem and result in higher win rates on average because your stop loss and your take profit levels or areas are the same distance apart from your entry. While if you think about a 1-to-5 trade, your stop loss is much more likely to get hit than your take profit. However, that's if you don't truly understand trading. There is most definitely a way, I know for a fact because I've proven this myself, you can have a high risk reward ratio of like a 1-to-3 with the same win rate that you would have with a 1-to-1. All right. And the reason this is tons of things. For example, how big your stop losses and take profits are, as in how big of a move it truly is, not just the ratio itself, because the ratio itself represents two ratios of percentage, but that doesn't tell you enough about how big those percentages are. So if you have an extremely tight stop loss, but you only need like 10 pips to go 1-to-3, that's literally a 1-to-3 risk reward ratio, despite not seeming like it, right? So that's literally, again, that's something just from experience that you guys are gonna find out at some point in your trading journey as you backtest and test out trading and see the results from trading. But there's that. So for most traders, I would highly recommend this risk reward ratio. Again, does vary a lot though if you're swing trading, scalping, or day trading. So I'm not gonna say there's a specific number or set guideline for this. Again, this also depends a lot on your personality, and there's so many things that come to a trading plan that are based on the person themselves. So, and the strategy as well. Strategy is very important on this. So I'm not gonna say this specific set in stone risk reward ratio and win rate that you want to target, but I would highly recommend, if you are able to with the training system, target a minimum 1-to-2 or 1-to-3. 1-to-3 is preferable. Target a preferably 1-to-3 risk reward ratio. What this does is this literally allows you to become, this saves you a lot basically from losing. The odds of you losing with the 1-to-3 risk reward ratio is very slim because you only need a 30% win rate to be profitable. If you have under 30% win rate, you'd be break even or not profitable, which means you could say every trade is a 50-50 trade, whether it goes up or down, but it's actually not how trading works, because again, it's kind of hard to explain how logically how this makes sense, but trading is not a coin toss where it's 50-50 odds of you're either right or wrong, even if you're guessing, because it all depends on your entry, right? All depends on your entry. So for example, I'm not even gonna give an example. This is extremely hard to explain. I just know how it works and how the market moves and how it is as the market. It's something hard to explain to a person, but basically that's just the reality of the market, right? If the market truly was a 50-50, win rates, chance, and odds, people could be guessing with 1 to 3 risk reward ratios and be profitable and not know anything about trading, or 1 to 1 risk reward ratios and guess and be break even. But why is it that most traders that lose money, their win rates are way lower than 50%? And most new traders or traders the first year, their win rates are like 40 and 30%. Even though you could say technically, if you guessed, it would be 50%. That's not how it works. It's not how it works in trading. It might be how it works in a coin toss, but it's not how it works in trading. So I definitely recommend preferably targeting a risk reward of 1 to 3. I'm not saying you take profits at 1 to 3. That's completely different. 1 to 3 is the average risk size versus reward. So average loss and average winning trade. Your average winning trade would be roughly 3 times the size of your losing trade. You're not actually putting the thing on the chart and targeting 1 to 3. I don't believe in that because I think that's flawed. And the reason why is because that's not trading based on the chart. That's trading based on a risk reward ratio that the market does not care about. The market does not care where you enter. Like I mentioned, the market does not care where your take profit level is, where you exit, things like that. Okay. The market just wants to facilitate trade, and institutions just want to get in and out of their positions. And they could use you, for example, as liquidity for that purpose. But point is, that's not something you should really be necessarily worrying as much about. You should be focusing on your own trading while focusing on trading what the market tells you. So I don't believe these people that set their risk reward ratio and let it run either 1 to 2, 1 to 3, or just stop out. I strongly believe in actively managing your trade. And well, maybe you don't even have to actively manage your trade, but more so you would want to place your stop losses and take profits at actual reasonable levels in areas that market will either reject or break through or things like that, or have a reaction off of. So that's my take on that. And I highly think that's the most logical way of thinking of the market, not targeting these exact numbers. Okay. So don't take what I said as in targeting these numbers. We're not targeting these numbers. These are just average based on statistics of our trading system. Okay. Meaning our average take profit level, for example, our first average take profit level is going to be roughly around a 1 to 3. That's just based on, again, data that you get from executing trades over the long run. If your trading system doesn't usually hit 1 to 3, usually hits 1 to 2, you can either try adjusting your trading system, finding a better way to execute, get better entries and stop losses, or that's the true nature of your strategy, go for it. 1 to 2 is going to be fine. So your win rate is 40% or higher. So I would highly recommend 1 to 3 for the most buffer space you can. 1 to 4s are more rare, and 1 to 5s. Me personally, most of my trades are 1 to 3 or 1 to 4 range. And sometimes they will go 1 to 9 or 1 to 10, 1 to 11. My highest trade risk reward is 1 to 23. And that was more so, it became a scalp that became a swing trade essentially overnight. So that's kind of how that happened. Most scalps or day trades won't be that big of a number. Most of them will max out probably 1 to 6. Again, this does depend on the percentage of the risk size. So that's what matters. And yeah, that's going to be it for this video on the importance of win rate and how you should consider this risk reward ratio when you are looking at